Last week, we learned Target is planning to cut its inventory by rolling out markdowns and slowing buying. This after the retailer disclosed an inventory surplus of 43% coming into the second quarter. Here to discuss how retailers are grappling with the current inflationary environment is Infosys Consulting Partner Elizabeth Ebert. Elizabeth, thanks for being here. You work with consumer-facing companies on this whole logistics tangle that we are witnessing right now. Amongst your clients and amongst what you're seeing, what has changed most rapidly here that has seemed to have caught these retailers flat-footed?
I think the primary change has been around inflation and particularly gas prices. So just as one of your prior graphics showed, gas prices up 50 cents in the last month. That's on top of a lot of uncertainty retailers were having about forecasting inventory coming out of COVID and other general inflation concerns. So retailers depend very heavily on data and being able to sense and respond to trends with consumer buying. And there's just been layer after layer of hits that retailers have had a difficult time incorporating into their forecast models. So they've just needed to respond much more quickly because of the nature of buying merchandise, which oftentimes happens 6 months or more in advance. It's quite a bit like turning around an aircraft carrier and very difficult to respond that quickly.
Looking at some of these brands, many of them working with manufacturers to try and figure out what type of inventory they can even expect to get into their stores. And amid a wave of direct-to-consumer moves that we've seen from manufacturers across categories, do we see a reversing of that course if you have enough of those retailers, or manufacturers, I should say, that are reliant on these retailers to actually move inventory through? And who's going to want to buy it even off of them when these retailers are still trying to move through the existing inventory that they have?
Yeah, the direct-to-consumer trend is really interesting, and we expect to see more manufacturers leveraging that, certainly through all the new ways in social media that allow customers to engage directly with manufacturers. The headwinds are certainly just going to come with the consumer sentiment and their ability to spend once they are dealing with their traditional and pocketbook issues around buying food and gas. So those headwinds will continue. So we see that as stabilizing more of a sort of an omni-commerce or omni-channel factor as consumers can engage with a brand and products in a lot of different ways. But right now, I think it's sort of a buck stops here issue with the consumer, and the direct-to-consumer initiatives are likely to face the similar headwinds that the retailers are as well.
Given where inventory levels are, Elizabeth, and given we are seeing an economic slowdown, do you think retailers are going to go back to their Great Recession playbook by offering really severe discounts?
Well, I think that we were in a very promotion-limited environment. I know when we were talking about consumer sales around the holidays, consumers were complaining about the lack of promotions that were really helping with their holiday spending. And so we are seeing a return to more of a promotional acceleration, which is great news for the buyers and for consumers. However, that's where we're seeing the margin pressure for our retailers. That is, the ultimate reflection of those promotions.
And Target sort of seems like the most extreme example of this, right? Having to come back again and retrench a little bit more. Are we going to see more of the retailers come out and make those types of dramatic changes to their inventory levels and to their forecasts?
Absolutely. Most of the big box or mass retailers are going to face similar pressures. Any retailer that has to buy well in advance. So they don't really have an option in many cases to cancel orders or to hold merchandise. So we're seeing similar reporting coming out of Walmart, also with the Gap, for example, that's had particular challenges in their Old Navy brand. So I would say across the board, the trend is going to accelerate with retailers.
Look, they can't blame it all on Old Navy because Old Navy's done a ton for that brand for a while here. Infosys Consulting Partner Elizabeth Ebert joining us here today. We got to have this conversation continue later on, especially since we're both passionate about the Gap, or Old Navy at least.